So when you say antiquated, are we talking about what essentially Robinhood argued yesterday in this blog post, and that is settlement periods are too long, or is it something bigger?
Well, I think that's one part of the solution. I think you need other things. We need higher margin requirements. We need restrictions on rehypothecation, which is the ability to keep reposting, borrowing and reposting collateral in these chains that can be very hard to untangle. I think, easy monetary policy has inflated stock asset values. It's also made it really cheap to borrow to buy on margin. And so smaller and smaller amounts of money are chasing these inflated stock prices and moving prices and creating the volatility. So I think that's the core part of the problem. But assuming there's volatility there, then you have this 2-day settlement process, which leaves, DTCC or other clearinghouse significantly exposed to counterparty failure when the stock is so volatile. And yeah, I think the technology is there to do this in real time, and I think we need to go to that. That would create take a lot of instability out of the system, and it would help the smaller brokerages like Robinhood survive. Now they're still facing this large, financial intermediary that's making a margin call, legitimately so. Then they're having to go to, big financial institutions or others to borrow. And so if you really want to democratize this stock trading process, yeah, I think I would put T+2 high on my list of things to eliminate.
Yeah, Vlad did say no reason why the greatest financial system in the world has ever seen can't settle trades in real time.
Yeah.
Practically speaking, how long would that take to change?
Well, this has been around forever. And it's really the SEC is in the driver's seat. Gary Gensler knows a lot about distributed ledger technology, which could be one of the ways to accomplish this. So it's really, if the SEC wants to accelerate it, I think they can. There's a lot of people who are vested in the current system. That 2-day float benefits some people. So, they're going to have to give that up. And then if you disintermediate the clearinghouses eventually, that's going to cause some disruption potentially as well if it's not handled right. So there are institutional forces working against this, but I really think now is the time for the SEC to step up and take it on.
Yeah, just to dig into that a little bit more, Sheila, I mean, when you do talk about that technology, are we talking about something like blockchain?
Well, I think I would say distributed ledger. And so blockchain's kind of got this, which is kind of the same thing, but it's got this pejorative. But yeah, the ability to use new technology to let buyer, to do this real time, to transfer the stock, transfer the money at the same time directly between buyer and seller. I mean, that's the whole idea. And in full disclosure, I am on the board of a company, one of the many companies is trying to develop a use case in this area. But I think the technology is here, and I hope the SEC, whoever does it, or maybe the Fed could do it. If we had a CBDC, a central bank digital currency, you could digitize, the cash part of the transaction, then you can digitize the stock, and again, just eliminate the intermediary and eliminate this 2-day lag. That would be a very, very dramatic change, but one I think we need to really start seriously thinking about.
Shepard Smith here. Thanks for watching CNBC on YouTube.